Welcome to today's video. If you've ever thought about investing in the stock market but felt overwhelmed, confused, or maybe even intimidated, you're not alone. The stock market can seem complicated at first, full of numbers, jargon, and fast-moving charts, but the truth is, anyone can learn how to invest. And with 2025 bringing new opportunities, better technology, and easier platforms, there has never been a better time to get started. In this video, I'm going to break down the basics of the stock market in a simple, beginner-friendly way. By the end, you'll understand how the market works, what strategies beginners should focus on, and the exact steps you can take today to start your investing journey. Why the stock market matters in 2025? Let's start with the big picture. Why should you even bother learning about the stock market in 2025? The answer is simple: wealth building. Unlike savings accounts or keeping money under the mattress, investing allows your money to grow over time. With inflation eating away at purchasing power every year, simply saving isn't enough anymore. The stock market has historically delivered average annual returns of around 7 to 10%, far outpacing traditional savings. And here's what's exciting: in 2025, investing is more accessible than ever. Fractional shares let you buy even a small portion of expensive stocks. Zero-commission trading apps make it easy to start with just a few dollars. And with so much information available online, you don't need a financial degree to get started, you just need the right guidance. What is the stock market? Okay, so what exactly is the stock market? At its core, the stock market is a marketplace where investors buy and sell pieces of ownership in companies. When you own a stock, you own a share of that company. If the company grows and becomes more valuable, your shares increase in value too. That's how you make money, through stock price appreciation. On top of that, some companies pay dividends, which are cash payments to shareholders. That means you can earn not just from a stock's price going up, but also from regular income. Think of it as planting a tree. You benefit both from the tree growing bigger and from the fruit it produces along the way. The market itself is divided into exchanges, such as the New York Stock Exchange, NYSE, or Nasdaq, where companies are listed and shares are traded. In 2025, most trading happens digitally, so with a smartphone and internet connection, you can access the same markets that billion-dollar funds are trading in. Types of stocks and investments. As a beginner, you might wonder, what kind of stocks should I even look at? Stocks generally fall into categories. For example, blue-chip stocks. These are large, established companies like Apple, Microsoft, or Coca-Cola. They're known for stability and steady growth. Growth stocks. These are companies expected to grow faster than average, often in tech or emerging industries. They can bring higher returns, but with higher risk. Dividend stocks. These pay shareholders regular dividends, making them great for passive income. Penny stocks. Very low-priced stocks, often speculative and risky. Beginners should usually avoid these. But here's the truth: you don't have to pick individual stocks at all if you don't want to. Many beginners choose ETFs, exchange-traded funds, which are bundles of stocks grouped together, like the S&P 500 ETF that includes the top 500 companies in the US. ETFs provide instant diversification, reducing your risk while still giving you exposure to the market. How to actually get started? Now let's talk about the practical steps to getting started. This is the part most beginners get stuck on, but I'll make it simple. Step 1. Set clear goals. Ask yourself, why am I investing? Is it for retirement, buying a house, building long-term wealth, or just learning the ropes? Your goals will determine your strategy. Step 2. Build an emergency fund. Before you invest, you need safety. Have at least 3 to 6 months of living expenses saved in a regular savings account. This way, if something unexpected happens, you won't be forced to sell your investments at the wrong time. Step 3. Choose a brokerage account. A brokerage account is your gateway to the stock market. In 2025, you'll find plenty of user-friendly apps like Robinhood, Webull, Fidelity, Vanguard, or even international platforms depending on where you live. Look for one with low fees, a simple interface, and access to the investments you're interested in. Step 4. Start small and simple. Don't feel pressured to invest thousands right away. You can literally start with $10 or $20 thanks to fractional shares. Begin with broad ETFs, like the S&P, P500 or total stock market ETFs, to get instant diversification. Step 5. Automate your investing. One of the best beginner strategies is dollar cost averaging, investing a fixed amount regularly, regardless of whether the market is up or down. This takes the guesswork out of timing the market and smooths out your returns over time. Common mistakes beginners make. Now let's cover the mistakes you need to avoid, because losing money in the stock market usually comes from making these errors. Trying to get rich quick. The stock market isn't a lottery ticket. It's a long-term wealth-building tool. If you're chasing overnight gains, you'll likely end up disappointed. Investing money you can't afford to lose. Never put your rent money or emergency savings into stocks. The market has ups and downs, and you need to be patient. Lack of diversification. Putting all your money into one stock is risky. Diversify across industries, sectors, and even asset classes like bonds or ETFs. Panic selling during market drops. Markets always have ups and downs. Beginners often sell in fear when prices fall, but that usually locks in losses instead of allowing recovery. Ignoring fees and taxes. Some platforms charge hidden fees, and taxes on investment gains can eat into profits if you don't plan ahead. Avoiding these mistakes can save you years of frustration. The role of research and learning. Here's something important. Investing is not gambling if you do it right. Successful investors spend time learning about the companies they invest in, understanding market trends, and sticking to a strategy. For beginners, start by following credible financial news, listening to podcasts, or reading books like The Intelligent Investor by Benjamin Graham or Common Sense Investing by Jack Bogle. But don't get overwhelmed. Your best teacher will be experience. Start small, learn as you go, and adjust your approach over time. One of the hardest lessons for beginners is patience. In 2025, with social media showing people flaunting quick gains, it's easy to feel like you're missing out. But real wealth is built slowly. If you had invested just $1,000 in the S&P P500 20 years ago, it would be worth several times more today, without you doing anything fancy. Think long term. Instead of worrying about what the stock market will do tomorrow, focus on what it will do over 10, 20, or 30 years. That's how ordinary people turn small investments into life-changing wealth. The power of compounding. Let's talk about compounding, the eighth wonder of the world, as Einstein supposedly called it. Compounding means your investments earn returns, and then those returns earn more returns over time. For example, if you invest $500 every month for 20 years with an average return of 8%, you won't just have the $120,000 you contributed, you'll have more than double that, thanks to compound growth. That's the true magic of starting early. Risk management. Now, of course, investing comes with risks. Stock prices fluctuate, companies fail, and markets crash. But risk can be managed. Diversification is one way. Another is understanding your risk tolerance, how much volatility you can handle without panicking. Younger investors can typically afford to take more risk since they have time to recover. Older investors may prefer safer, income-generating investments. In 2025, tools like robo-advisors can even help you manage risk automatically, adjusting your portfolio based on your age, goals, and market conditions. More than knowledge, your mindset will determine your success in investing. Be consistent, patient, and disciplined. Don't compare yourself to others, and don't let fear or greed drive your decisions. Remember, every professional investor was once a beginner. What matters is that you take the first step and stick with it. So let's recap. In 2025, getting started with the stock market is easier than ever. You don't need a lot of money, you don't need to be an expert, and you don't need to take big risks. Start with your goals, open a brokerage account, begin with ETFs or simple investments, and automate your contributions. Avoid common mistakes, keep learning, and most importantly, think long-term. Investing isn't about timing the market, it's about time in the market. The earlier you start, the more you benefit from compounding. So don't wait for the perfect time. The best time to start is today. Thanks for watching. If this video helped you understand how to begin your investing journey, make sure to like, subscribe, and share it with someone who's also thinking about investing in 2025. And let me know in the comments, are you planning to start investing this year?